Welcome to this explainer. I'm absolutely thrilled you're joining us today because we're taking a deep dive into the financial engine of a major player on Bursa Malaysia, Bermaz Auto Berhad. If you've ever wondered how to find highly liquid, profitable investments without sacrificing strict ethical standards, you're exactly in the right place. We're going to lift the hood, unpack the data, and give you some clear, actionable insights. Let's get started. Okay, let's look at our due diligence roadmap for today. We'll start with meeting Bermaz Auto Berhad, then we'll check how they passed the Sharia test, look under the financial hood, analyze the 50-day technical chart, discuss macro trends and green mobility, and finally deliver the final verdict. So before we get into the weeds, I want you to consider something. Can corporate profit truly coexist with strict ethical principles? You know, in modern investing, we hear all the time that picking ethically compliant stocks means you have to sacrifice yield or liquidity. But as we're about to see with Malaysia's Islamic finance market, and specifically the retail auto industry, that's just not the case. We're going to explore exactly how this company manages to strike that elusive balance.
Section 1. Meet Bermaz Auto Berhad.
Incorporated back in May 2010 and based in Shah Alam, Bermaz Auto Berhad, or Bay Auto as it trades, hit the main market of Bursa Malaysia in 2013. And while they've evolved way beyond just being a small-time dealer, they are now a highly liquid giant in the consumer products and services sector. They've built up this incredible multi-brand network. They're the go-to distributor for Mazda and Malaysia in the Philippines. They've locked in the rights for Kia and Peugeot, and they even recently added the Xpeng Smart EV Mark to their lineup. But they aren't just pushing cars off a lot.
What really sets them apart is their operational depth. You see, instead of just relying on the downstream retail side of things, Berhad smartly secures its upstream supply chains by taking strategic minority equity stakes in major local contract assembly operations, specifically Mazda Malaysia and Enocam Corporation. They guarantee these vehicles can be manufactured locally. This is huge because it gives them incredible resilience against all those global supply chain shocks we've been seeing. They really are a vertically integrated powerhouse in their sector.
Section 2. Passing the Sharia test.
Back in July 2021, Berhad was formally admitted to the Bursa Malaysia Sharia Index. Now, achieving that status is no walk in the park. It requires passing some seriously rigorous semi-annual assessments by the Sharia Advisory Council of the Securities Commission Malaysia. But qualitatively, Berhad clears these hurdles with ease. Because their core business is all about consumer transit, they're fundamentally clear of any non-permissible areas. You're absolutely not going to find any gambling, alcohol production, or conventional financial services anywhere in their operations. Now, what's really interesting is this 33% figure. Ethical screening isn't just about what a company sells, it's about how they fund it. The Sharia Advisory Council strictly limits conventional debt to total assets and conventional cash to total assets to a hard maximum cap of 33%. And Berhad, they masterfully stay well under this cap. They do it through a highly disciplined capital structure and maintaining strong, interest-free liquid cash buffers. The big takeaway for us is that they offer a highly liquid, Sharia-compliant equity that both retail and institutional investors can hold with total confidence. Section 3. Under the financial hood. Let's see what this engine can really do. When we break down these core fundamentals, it becomes clear just how well this company is running. First up, take a look at that return on equity, or ROE. At 15.83%, that shows some brilliant capital efficiency. Management is just doing a phenomenal job turning shareholder capital into profit across their retail and assembly segments. Next, consider the price to earnings, or PE ratio, sitting at a super reasonable 11.38. This essentially tells us the stock is priced fairly compared to what it earns. There's no massive speculative premium baked in here, which honestly is absolutely perfect for risk-averse Islamic funds. And this brilliantly illustrates their financial stability. A remarkably low debt-to-equity ratio of just 0.40. This low gearing means they're financing their operations mostly through equity, not debt. It creates a massive protective buffer against bankruptcy. And you know what that kind of stability yields? Quite literally, an incredibly attractive 5.05% dividend yield. Their rock-solid balance sheet empowers the management team to keep income levels high, reliably sending steady, quarterly profits right back to shareholders, even when the broader economy gets a little shaky. Section 4. The 50-day technical chart. The short-term price action we're looking at is incredibly telling. If we rewind to mid-April 2026, the stock hit the ceiling of an ascending channel near RM 0.95, and as you'd expect, ran into some selling pressure. Throughout May, we just saw a slow, controlled correction. Nothing to panic about, just short-term traders taking their profits. By early June, it bottomed out around RM 0.85, perfectly tapping the lower trend line of its macro channel, almost like a launchpad. Then, mid-June hits,
Boom! A huge jump in buying volume, fueled by corporate earnings and dividend news, spurred this aggressive bullish reversal. It rocketed the price up to near RM 1.06. By June 26th, things cooled slightly, settling comfortably at RM 1.02.
So what does all that actually mean? Well, translating that price action reveals a major shift in the stock's underlying structure. During that massive mid-June push, the price sliced right back up through the RM 091 to RM 093 horizontal resistance zone. In technical terms, we saw textbooks support resistance turn. Basically, this old ceiling transformed into a rock-solid structural floor. This really confirms that the stock is locked in a strong, volume-supported uptrend, giving it a highly reliable base for future price appreciation.
Section 5. Macro Trends and Green Mobility.
We all know the automotive sector is incredibly sensitive to macroeconomic headwinds, things like interest rates, inflation, and changing consumer habits. Higher rates make car loans more expensive, and inflation eats into disposable income, which can really hurt sales of traditional combustion engine vehicles. But BAAUTO has a fantastic defense mechanism here. First, focusing on mid to premium mass market brands like Mazda gives them a bit of a buffer against tighter credit. But more importantly, they are pivoting. The vulnerability of traditional engines is being offset by the massive draw of green tech. By bringing in XPeng's smart EVs, BAUTO is catching the wave of the structural shift toward energy-efficient vehicles. It's not just about selling cool new cars. This move massively boosts their ESG, or environmental, social, and governance value. And that is a huge magnet for institutional Islamic capital.
Section 6. The Final Investment Verdict. Let's pull all these threads together.
I want to read this quote directly from the conclusion of our source analysis because it really hits the nail on the head. It states, "This report proposes an unequivocal investment decision for ordinary shares of Bermaz Auto Berhad." That is a highly confident stance, but the data absolutely backs it up. You've got a stock that's totally devoid of speculative overvaluation, sitting at a PE of 11.38. You've got a reliable structural floor that offers an incredible asymmetrical reward-to-risk setup, and fundamentally, you're looking at a company poised for sustainable long-term growth because they are perfectly aligned with the broader shift toward green mobility. This analysis makes an incredibly compelling case for Bermaz Auto Berhad as a standout Sharia-compliant equity. But stepping back from just this one stock, I really want to leave you with a question to chew on. How will the shift toward green mobility, paired with the rising demand for strict ethical screening, reshape your own investment portfolio in the years to come? The markets are shifting fast, and applying this kind of structured, diagnostic framework is exactly how you stay ahead of the curve. Thanks so much for joining me on this explainer, and as always, keep learning.